Tea in Finance, Business Finance and Credit by a good friend of mine named Peter King. I just came across this article and I thought I'd come in and do a casual live session with you. I haven't actually been doing too many of these. I was accustomed to doing them. It was pretty much every day I did them, but really have slowed down a lot. My time doing these things, which is fine, you know. We always need to do what we need to do. I hope everybody's doing well. Thank you for joining in. Enjoying the beautiful transition into autumn right now here in Las Vegas, Nevada. It's been quite nice. The weather has been quite nice. And I'm actually preparing myself for a little road trip this week. Later this week, I'll be traveling many different places. So actually, if you're watching and want to meet me on my trip, go ahead and message me and let's try to connect. I will be going to Albuquerque and then through Colorado, specifically Denver and Fort Collins, into Wyoming, and then going to visit our friend Joe in Spearfish, South Dakota, and then move over through Montana and then into Utah, passing through Salt Lake City back to Vegas. So in total, I should be on the road about 11 days. It's going to be a long journey. But if you are anywhere in that path, even if you're a little bit outside of that path and you would like to meet up and have some tea, or if you would like to learn about hemp, because actually the purpose of my trip is to talk with folks about hemp and to get the word out about the industry. Hemp, of course, is the derivative product of CBD. That's where CBD, as a medicinal, as like a therapeutic product, is extracted, which is new and somewhat taboo, although it is pretty much legal, federally. The Farm Bill, I believe, of 2018, so as of 2 years ago, it is completely legal to grow and manufacture hemp, which serves a purpose way beyond just the therapeutics and the pharmaceuticals that we are seeing as a big trend right now. But hemp is actually a very positive structural material, fibrous material, and is really sustainable in its renewable and regenerative nature. So yeah, if you're interested in hemp, if you're interested in tea, and you're anywhere along that journey throughout New Mexico, Colorado, Wyoming, South Dakota, Montana, and Utah, of course Nevada too, reach out to me. You can DM through whatever platform you're watching on right now, or you can email me info@tealet.com, and those emails will go directly to me. Today, right now, I'm going to read an article for you. This article is written by a new friend of mine, someone that I met at the most recent World Tea Expo last year, named Peter King. He's a prevalent writer within the tea world, and he actually just published a book called The Heroines of Tea, Women Who Left a Thumbprint on History. Really interesting book about the unsung female heroes of tea. And Peter actually gifted this to me and he signed it. So this is extra special for me. Where did you sign it? It says, "To Elise with regards, best wishes and admiration from Peter King." Yeah, nice guy. He just published an article titled "Financing the Future, Capital and Credit in the Tea Industry." I haven't read the article yet, but I figured, wow, thanks, Peter. This is definitely a topic that I want to share with our community because it's something that we don't talk about a lot. We talk about tea business, and then we talk about even the history that tea has played in human financial history, literally being the first form of currency in our international trade, specifically between China and Tibet. Little pressed cakes of tea were actually used as references of value in those international trade relationships that were built between these different communities that did not share currency or did not even share an ability to exchange those currencies that they're working within. So they used the tea to create those references of value, because tea was a common value throughout all these different communities, even if they did work within different economic structures. But the article I'll share with you today, I don't believe is about tea being a form of currency, but it is in regards to finance, and I thought that this would be a good read for us. So I am going to go ahead and get started. So I've got the text up, so if you want to follow with the text, you can. I'm also going to share the link to this article with you. This is in Stir Tea and Coffee magazine, which, as of right now, from my experience during pandemic, is the most proliferating source of tea industry news during the pandemic. There has been a significant slowdown in the spread of news, of industry news. So it has been, touch and go, but I find that Stir Tea and Coffee has done a great job of keeping the flow of news going. Of course, our good friend Dan Bolton with Tea Journey Magazine has been playing a big part of that, as well as our friend Peter Keene here. So with no further ado, I'm going to read this article for us. There's a today, tomorrow distinction in any business's financial operations. Today centers on revenues, cost management, and productivity, getting the most out of the resources available now. Tomorrow is about investments that can improve all of the above. The variables in the financial funding equations are cash flow from operations plus capital from investors, lenders, and grantors. For too many tea producers, regions, and even countries, the coefficients here are not positive. Weak cash flow generation and eroding profitability, reduction in access to bank credit, and even for large, well-established players, a weakening of asset base. To pick one example of each that indicates a more general pattern: 1. Profits even before the pandemic. Sri Lanka's tea growers had seen an accelerating weakness with flat revenues and declining production. At the end of 2019, only 3 of 14 public tea estates reported a profit. Only 3 of 14 tea estates reported a profit. I'm surprised there was even 3, so I guess that's kind of good news. 2, low in interest. In Rwanda, whose tea industry has been expanding and where government support has been strong, interest rates doubled from 2012, 8%, and 2014 to 15%. And we can only imagine, and that's just within a 2-year period. Now we're probably looking at interest rates significantly higher. Hey, Kayla, good to see you. Predatory financial interest rates, definitely an issue here. And thirdly, large firms collapse. RPJ, India's third largest tea producer, joined the largest plantation owner, Russell McLeod, in reporting large liquidity problems in 2019 and a consequent inability to service its debt. McLeod has sold off 11 tea gardens. Duncan's debt problems had led to bankruptcy and a government takeover of half of its 14 tea gardens in 2016. So even the big guys are in trouble here. This is not just the little guys that are having financial problems. Cash is king. Cash flow from operations is the core problem for growers and processors today. The financial stresses facing them are widely tracked and reported with less and less good news. The overall realities of the tea industry are analogous to tightrope walking across a windy chasm. Many will slip and fall off. Global overcapacity, price volatility, seasonality, labor shortages, and wage cost, energy and water supply, land degradation, drought, and shift in rain patterns all compound unpredictability and instability. The trends are increasingly negative and only occasional blips of growth. The pandemic adds massive new stresses and changes the dynamics of every factor affecting supply, demand, and production. No one can reliably forecast medium and long-term impacts. That's across the board. I mean, that's been the biggest challenge that I've been dealing with as a business owner right now is how do we, even for myself, and if I have employees, like that's enough stress right there of understanding the unpredictability of the future of what's going on and how I'm going to be able to pay the bills and going to be able to make payroll. But in our case, we work with a network of dozens of rural, small scale organizations, family organizations, that you have to tell them, we don't know where the market's going to go. We don't know how cash flow is going to be met. So yeah, lots of issues. Most of the reporting focus is thus on seasonal and annual operating profitability. This year's tightrope walk. How are we going to survive? I just watched the World Tea Expo, their virtual summit, and that was a constant theme in the summit, in the presentations there, is business owners just saying they're trying to make it through this year. They're not even starting to think about when things are going to get back to normal because we're still just trying to survive operationally this year, right now. The measure of health here is free cash flow, the funds available for distribution to owners, repayment of debt, and most key investments that directly improve operations, productivity, trade, and sustainability. Free cash flow is not the same as profit, which is affected by many non-accounting deductions like depreciation, accruals, and deferrals. NFL teams are experts in reporting an accounting loss while piling up the real money that drives up their value. But tea production is very much a cash crop business. In many instances, there's a gap between sale and cash. Payments from sales and auctions, trade finance of exports, and purchase of seeds and fertilizer in advance of harvesting revenue. There's an even deeper problem that seems likely to change the structures of the industry: the cost and availability of long-term financial capital. The dilemma is that most of the methods, technology, and biomanagement that helps improve revenues and operating costs demands funding that does not provide immediate returns and that is unaffordable for most producers. Relatively few firms at the retail and service end of the value chain can attract angel investors or acquisition by large companies with strong financing capacity. Startups like Chai Point in India raised capital, $33 million, for instance. It's a lot of money, from private investors. I didn't, a Chai Point. That must be like a retail service point. I don't know about a chain of $33 million? Dang. Congratulations, Chai Point. I hope you succeed. Most tea companies must finance growth from debt. Around 2010, this was fairly easy to get. The tea industry was on a track of continued growth of 4 to 7% a year. New markets opened up, especially among Asia's increasingly affluent and trend-seeking millennials. The wellness market was beginning to surge, with herbal and green teas expanding variety and quality. There was a potential cornucopia of new products such as bubble and cheese tea. It wasn't a rosy scene, but a fairly robust one, and most commentaries as late as 2018 focused on the positives, especially at the consumer end of the value chain. Low interest rates reflected confidence. In 2011, for instance, the interest rate on government agency loans for Sri Lankan tea farms and factories was below 10%. That's a healthy interest rate for the business, from the perspective of the business, yes. In 2017, it was over 15%. So in a 6-year period, a business went from getting a feasible business loan to a predatory business loan. In 2019, 15 factories that had been supported had closed. 30 were classified as NPL, non-performing loans, whose repayments were put off for 1 to 2 years. So that ends up being the consequence. It's like a slippery slope. Like you start making the loans predatory, and then they're not going to pay it back, and then it's like the banks have to make them even more predatory to make up their losses. And that's how we get to this position where the poorest people have the most predatory, loan financial situation. In Rwanda, whose tea industry has been expanding and where government support has been strong, interest rates doubled from 2012, 8% to 2014, 15%. 2 years, and it doubled. In 2010, the National Agricultural Board encouraged tea farmers' cooperatives to take on heavy loans from the Department Bank of Rwanda to invest in processing factories and increase production with debt. The debt would be repaid from the resulting crop revenues. These did not materialize, with droughts and floods adding to export competition and price erosion. By late 2019, farmers organized appeals to waive the loans. One cooperative illustrates the scale of the problem. Its 1,000 smallholders owed $3 million, of which $1 million is accrued unpaid interest. The cooperative only paid off $100,000 of the principal, and the total is expected to accrue to $8 million. The original interest rate of 8% is now 16%. Other borrowers are paying 19%. So 20% is about what I hear from like my network of small business owners that we work with, small growers that we work with. 20%. It's crazy. Any rational business in the United States or in North America or Europe, they wouldn't take a loan over 8%. Many of these problems relate to the pandemic that has hit every tea-growing nation, but they also reflect longer-term structural issues. Climate change has led to volatility and uncertainty on crop production volumes, and the gap between supply and demand has had the same effect on prices. In Assam, operating costs grew by 7 to 10% a year, but prices only by 1%. Industry associations have asked for major subsidies on debt and long-term financing to offset the erosion of margins. Representatives from Pakistan's farmers met in August 2020 with senior government officials to demand interest loan loans. They highlighted agriculture as the mainstay of the economy. Efforts to diversify into cash crops and the rising cost of seeds and pesticides. They proposed that $300 million be set aside for the betterment of farmers. However, sympathetic one may be, it seems simply unrealizable. The government has raised the funds and, in effect, borrowing to enable lending. Pakistan's bond yield at this time was over 9% and rated as a weak B minus, with a predict 10% probability of default within the next few years. If farmers are not generating profits today and there is no positive signs of major market shifts, how will they be able to repay the debt? How can a strapped government absorb those losses? One key element of short-term capital covers the gap between production, sale, and receipt of payment from the contractor, auction buyer, wholesaler, distributor, or other party in the supply chain. The key players here have long been private banks in handling the domestic elements in various types of agencies and providing trade finance and acting as guarantors. In India, small farmers are unable to obtain any bank loans to buy seed and fertilizers. Private money lenders are charging 25 to 35% on the typical 2000 financing, now demand 50 to 60%. That's insane. And that's like payday loans, So, this is not a problem just with small-scale farmers. This is a consumer problem, too. You need a quick $2,000 to pay your rent and pay your bills, and you're, stuck in a loan where you're paying up to 60% interest rate, in addition to whatever else fees are associated with the loan. The gap between oversupply and lagging demand makes it increasingly hard for Indian producers to obtain any bank funding. The Economic Times newspaper headlined the situation in Darjeeling, May of 2018, as fund-starved Darjeeling tea companies face an existential crisis. Ratings of many firms have dropped from A to B, triple B, which means it's difficult to get working capital from the banks. Bank cutoff loans except to A- related producers and impose tight limits even to those. Since then, the situation in Darjeeling worsened greatly, escalating costs, massive crop losses from political strife, a surge of legal and illegal increase in teas, competitive teas from Nepal, soil erosion and underinvestment in bush renewal. The list goes on and on. The State Bank of India's general manager commented that we consider the rating changes while lending. But more than that, we follow a cash flow based financing policy. The cash flow isn't there. Even if it were, time is not on the side of most players in most countries. There can be a long gap between investment and payoff. One obvious instance is the shift to organic farming. This typically reduces yields for 4 years. So yeah, you're trying to do good, and it inhibits your ability to get access to finance. Sucks. One obvious, the many tools of precision agriculture are outlays that start generating value quickly but still demand money not tied up in today's operations. Drones that handle core functions of aerial surveys, light spraying, crop monitoring, tracking of water levels, weed growth, etc., cost as low as $1,800. So there are tools that will help reduce your need for labor and whatnot, but they cost money up front. Ones with multi-device and extra payload capabilities are in the $15,000 range. Maintenance, training, and other costs add up for the more complex systems and can be as high as 25% of the capital cost per year. The benefits can be spectacular. Up to 90% reductions in spraying and weeding costs, water savings up to 90%, chemicals reduced 30 to 50%, but the investment must be paid in advance of the payoffs. Social impact and social development bonds, rather than loans, have been a source of large infrastructure funding. These aim at attracting a diversity of investors who take a long-term view. Kenya's Gura hydroelectric project, led by the Tea Development Agency, attracted financing through the International Clean Development Mechanism. This is a complex scheme sponsored through the Kyoto Protocol, where industrialized companies purchase sealable credits for projects that reduce emissions in developing economies. Initiated in 2005, the impact and future of CDM is hard to evaluate. Energy and water costs are a growing burden on producers. Here, the capital investment is in infrastructures that serve many parties across a region. Historically, agencies such as the World Bank have spearheaded and underwritten the costs. Less than a decade ago, its total budget for loans to remediate climate change was $2.4 billion. It doubled in 2012 to $4.6 billion. Another doubling in a year was announced at the end of 2018 to $200 billion globally in 2021 to 2025. Here again, there is a gap between investment and return. Hydroelectric plants can take a decade or more to build. This is a bleak picture, and it's made bleaker by all the disruptions and uncertainties created by the pandemic. It seems certain to constrain the ability of governments and many tea-growing nations to raise the commit funds to loans, subsidies, trade financing, and infrastructure building. That applies, of course, to many industries. Every capital-intensive opportunity must come with a capital funding solution. That is the unmet challenge for tea. So that was the sad news. Kayla, thanks for listening. It is really sad. And, speaking of subsidies, right? So that article was talking about the need for the government to intermediate, with subsidies, with loan guarantees for their farmers. The United States is the king of agriculture subsidies. And some news came out yesterday, published by oh no, I don't want to see that one. Published by the New York Times about this year's farm subsidy program. And I've spoken about farm subsidies here in one of these live sessions before. This year, 2019, had a record-breaking amount of farm subsidies distributed. Many distributed to farms that are not producing. They're paid to not produce, essentially. And that number was $26 billion. Or was it 24? $24 billion. And then this year, it's $46 billion. And that difference right there, more than doubling, that money actually came from the CARES Act to respond to the pandemic and was supposed to be dedicated for particular crops to support particular farmers that are, subsisting our food supply chain. But just over this past weekend, that money got shifted around, legally was shifted around, and now actually, I think 200 million of that is going directly to tobacco farmers, which tobacco farmers are legally not supposed to receive any of these subsidies. Hey Shiloh, good to see you. Talking about money today. I know no one likes to talk about money, especially during a time like this, but we're talking about the business of tea and our love of tea and wanting to see tea continue to be produced. We do have a very big money problem that we got to deal with, a cash flow problem of how we can make monies available to farmers. So immediately right now I'm talking about the U.S. Farm Subsidy Program, the most advanced, mature farm subsidy program in the entire world. You know what I want to see? I want to see what the distribution of these subsidies to different different crops. Because I know the corn industry gets a big one, and that's to subsidize our addiction to high fructose corn syrup. Yeah, it is. It is important for the future sustainability of tea. Even farmers that are trying to do the proactive work of converting their fields to organic, we've heard that time and time again about the resource and time that's needed to do those conversions, and then your yields are down during that time, and so that's a cash flow problem. You don't have cash flow from those sales going on, and so farmers are not incentivized to make those right decisions for their land and their resources, and the cash flow is the problem. And now with the pandemic on top of it, it's even a bigger challenge. The analysis found that farms in the top 10% of crop sales distribution received approximately 68% of the subsidies. This was in 2014. Farms in the top 2% received approximately $50 per acre in subsidies. So it's like our subsidy program in the United States is set up so that the bigger of a company you are, the more subsidy, the more dollar amount per acre you're going to receive. So you have individuals such as Ted Turner, who you probably don't think of as a farmer, as an agriculturalist, but actually Ted Turner is one of the largest landowners in the United States. A lot of that land is land grant. It's not even in productivity. It's just open, unused land, and receives millions upon millions of dollars every year in these subsidies, just from being such a large landowner. So it's pretty backwards. So I'm definitely not supporting the use of farm subsidies. I think that whole system really does need a reevaluation, especially this year. So much money, $46 billion going towards farm subsidies, which is really just going towards the more wealthy, powerful people within that ecosystem. Yeah, Mark, it is no surprise I went to the tobacco. Yeah, and that was money. So like that additional between that difference between 24 billion and 46 billion, so that's 22 billion dollars. That directly came from that CARES Act package and was supposed to go to crops. You know, so that's the Wall Street, the Wall Street Journal or New York Times. That was New York Times yesterday. That article came out. But I'm looking at this article. Yeah, it disappeared. The money was reserved for these bump crops. But they're just going to ask for more money again. And the system's just going to keep going. So anyway, I don't want to talk too much about subsidies. This just makes me angry. It just makes me angry. But what I do want to talk about is what are the feasible opportunities for making financial tools available to the people that need them most without having these predatory middlemen, banks, and also to understand there's a reason why they're being predatory. They're just being smart businesses. The risk of default on these loans is really high. And so you have to charge a higher interest rate to ensure that, the finances work for the business model. So rather than saying that the system itself is working against the farm, yes, that's right. The system is working against everybody, really. But we can look, even broader at the system and say, okay, so we have capital. Everybody has capital. How do we leverage the network of people with capital to get it to the people that need it efficiently, with a smooth flow of information that would inevitably positively affect the default rate, the risk. So Shiloh says, hearing these specifics is such an important resource. It can help to shape the consumer's mindset, which then can make small moves of reshaping the supply-demand mentality for the farmers. Yeah, so you're right, Shiloh. If the consumer gets engaged with these topics and understands, and the consumer has the money, that's what's cool. Is like if you take all the middlemen out, in this case, it's the banks. Or, in some cases, it's the government. If you take those middlemen out that are, dealing the money, and if you take them out, and then you have the producer and the consumer left, and whatever else value chain members are there, they're there. But ultimately, it's these two. The capital exists between these two. The trust and the transactions exist between these two. You don't need that middleman. And so I think that in this time of innovation and radical interconnectivity and engagement between people, exchange of information between people, we are going to see some major advancements in these financial tools that are going to be positive for everybody. And so an idea that I have, and I make this idea public, I want everybody to know it, because either I'm going to build something like this to be used, or someone else is going to build it and I'm going to use it. And it just needs to happen quickly. Is, utilizing blockchain technology to create those connections. So we've all heard of blockchain. We've all heard of Bitcoin. A couple of years ago, we were all hearing about the elusive ICOs and these crypto companies that were raising billions of dollars to launch a coin, speculative value on a coin, and people would start trading that coin, and more money would be, put into that ecosystem, more value put into that ecosystem, more trust put into that ecosystem. So you can take that same concept and allow a farmer to launch their own ICO. And they don't need to raise billions of dollars. Maybe they only need to raise a couple $1,000s to invest in one of these hydroelectric systems or an irrigation system. or they need a couple $1,000s to hold them over on this like 2 acres of land that are going to be in conversion to organic over the next 4 years. And so that money is going to help with that cash flow loss at that time. There's so many reasons why a farmer would want to raise money, and it doesn't have to be billions of dollars. Like, we're talking very small loans here. And so yeah, they can raise that money directly from the investor, and the investor being the consumer, or ultimately going to be the business that they're going to do transaction with. Tea shop owner, tea business owner can invest in that loan, help them succeed in harvesting their products, and then the farmer can pay that loan back. And these loans are backed with the information, with purchase orders. I mean, if it's the business that's loaning the money, if it's the tea shop that's loaning the money, and the tea shop could actually be engaging their customers as well in that process and saying, hey, like, this farmer's going to do this project and we're going to be a part of it. We're going to be like investors in this project. And we're going to get a discount. So like when they invest in the project, the value of that product is almost zero because the harvested product doesn't exist yet. It hasn't been harvested. They haven't even put the seeds in the ground yet. So the value is here. Let's say it's at $1, just a reference point. It's at $1. Once that harvest comes, then all of a sudden that the product exists and it has value. And so that difference there would usually be the investor's return. There could be some fees involved in, the escrow or the platform that's actually hosting these transactions. But ultimately, that difference right there would be the investor's return. And so in the case of a business that's going to accept product as repayment on their loan, they get that as a discount. So, they bought in when the product was worth $1. When the product is harvested, it's worth $10. And so they get a discount. And in the article that I shared with you, those interest rates of 15%, 20%, 25%, and some of those loans, it was 60%. That would be, the difference that the farmer would have to pay in addition on their loan, which is predatorial. It's not going to work. And actually, those loans themselves, maybe not for the tea industry, but several other industries in India, is causing really big problem with farmers committing suicide because they're like in debt so much and they're so stressed out about trying to provide for their family that they just kill themselves. And those debts actually pass on to the rest of the family. So it's not a solution in any way. We need to think bigger and deeper. It's something that benefits everybody, not just the farmer, but also the consumer or the investors. These investors that invest in these, micro loans for the farmers could just be, normal people that want to see good things happen in the world and, need to make 6% return on their savings, or else they'll go to the bank and do that. So I think there are some cool creative ways, and I look forward to see what these innovations end up being. And you better believe that I'm going to be like right at the front of the line, ready to implement all of these things. Yeah, so that's all I had to share today. Shiloh, would you say? So true. The trust is there, especially regarding small batch tea farmers and privately owned tea houses. You're right. And Shiloh, this method, this system that I'm talking about is not new. I mean, tea shop owners do it all the time. They do, these pre-buy, you group buy that you can pre-buy your tea before it comes, and you get some discount on it. Tea shop's been doing this. I think that there's this is not a new thing. It's not going to freak people out as something launched up and the consumer was asked, hey, do you want to step forward and become the banker for the farmer? Do you want to be engaged in this process? I don't think it's going to be like too far out there. I think the world is ready for it. More sustainable methods of equitable benefit. The methods are available. Intrigued hearing these innovative methods. Thank you for sharing. Well, thank you, Shiloh, for listening. And yeah, I share this not because I think that I'm going to build this. If I have to build it, I'll build it because it just needs to be done. But more than likely, someone else is going to build it. I have no problem not being the owner of everything. I have no problem with distributing that influence and that value between more stakeholders. So if you're involved in the technology industry and these concepts interest you, you should reach out. And I'm happy to throw around some ideas, but there's definitely a huge problem in the industry, not just in tea industry, but pretty much all of agriculture. And the fact that like our subsidy system here in the United States is so upside down and backwards really shows that we have a problem even here too. This is not a problem just in India or just in China or just in Taiwan or Japan. It's everywhere. So yeah, money is an important thing, and it's something that even if we don't have a lot of it as consumers, we have a say, and we are stakeholders in this whole thing. So thank you, Peter Keene, for all of your great information and the article that I shared today. It is important for us to think about these things. They don't get thought about. So yeah, this is an article just published October 8th. I put the link in the comments if you guys want to see it. And yeah, I think I'm going to go now, but this has been fun. It's been a while since I just like dropped in and did a live with you guys. But yeah, I hope you have a beautiful rest of your Tuesday.